Hey everybody, want to make a video here real quick after the close. First off, let me say that this is not investment advice. This is for paper trading and for entertainment purposes only. Okay, so the title of the video is AMC to the Moon. Is Meme Week coming? And the reason I titled the video that is I think we might be coming to the end of the rally in the S&P 500 or the SPY ETF. And if you've been watching the market for the last couple of years, you know this to be true that it's always in that last week of the rally on the SPY that the meme stocks will play catch up. So they'll have these big moves and they'll play catch up, and usually it's to the 200-day moving average. So I think there's going to be some opportunity in some of these names next week, like AMC, GME, Bed Bath and Beyond. But specifically AMC, if we just look at it from a technical standpoint, we do have bullish divergence here on the daily on the RSI. Big move up after that bullish divergence. Tagged the 50-day twice. We're holding the 50 RSI level here, and also holding this gap. We've tagged it 2 days in a row, and we've held that gap for those 2 days, and that gap's at right around $5. What I'd like to see on Monday is price come down, tag the 20-day, and then close another day above that gap. And then I think we could start to move and make our way up to the 200-day moving average. So the contracts that I was looking at were February 3rd, 650 contracts. They were 15 cents a piece at close. Like I said, if price moves down to the 20-day on Monday, that's 12% or 10 to 12% move, I believe. Yeah, so right around 11%, 11.5% move down. That would be the best time, in my opinion, for me to get these contracts. So, they'd be considerably less. Maybe you could pick them up for, 5 cents a contract. But even at the 15 cents a contract, if it went to the 200-day, that's $8 a share, roughly. And that would be, $1.50 a contract. So it'd be a 10 to 1 if I picked up the contracts at 15 cents a share. So if I was able to, say, pick them up at 5 cents a share and it went to 150, it'd be a 30 to 1. Obviously, that'd be great. So it makes sense for it to go the 200-day as well, because there's this downtrend line from the very top. You can see we have this downtrend line, and there's a ton of reactions along this line, and that's about where the 200-day is at. There's also this resistance here. You can see it with these candles right here. And part of the reason I think that we're coming to the end on the rally on the S&P 500 is if we look at the VIX. I have a trend line here on the VIX that goes back to, I believe it's 2017. Yeah, so 2017 trend line, long-term trend line on the VIX. You can see when it's been hit in the past, especially when it's also made bullish divergence while tagging it for the second time, that you've had big moves up in volatility. So you can see that we tagged it today for the second time, and also have bullish divergence here on the daily. I could say probably you could say triple bullish divergence on the RSI, because you do have bullish divergence there, then there, and then there. So it'd be triple bullish divergence. But as far as being there on the RSI and on the MACD, it's a double bullish divergence. That's it's a strong technical pattern when you're hitting a long-term trend line while making a divergence on the daily. So I do think some volatility is going to be coming in. And then also we've got the Fed meeting next week, and the Fed, said that they didn't want to see any rallies in the market. So I think that they might pour cold water on the rally, and that's what makes me think that we're getting towards the end of the rally. So I see some opportunity there in names like AMC, and you can see GME. It hasn't hit its 200-day yet as either, and then also Bed Bath and Beyond. I found this interesting. I've got this long-term trend line on Bed Bath & Beyond. It goes all the way back to 2008. So November 2008 low connected to the 2020 low. And you can see as soon as we got below it, we had the big drop, the 30% drop, then the 22% drop. So but a big bounce back. Now we're back above it, and you can see that's where we're holding. So it could be something like a ABC move up to the 200-day, a measured move up. It could go even higher. You know, sometimes these moves will go above the 200-day, just like this over here. And, you know, there's a gap here at 1164 on Bed Bath & Beyond. That's a 373% move. Now, we know that this stock can do that. You know, so Bed Bath & Beyond is another one I'm going to be looking at, but I really like the play on AMC. GME, you know, it's about, I haven't looked at contracts on GME, so I'm not sure what the opportunity is there, but that would be a 25% move, and that would make sense too because there's a gap here, and there's also some resistance here, some you can see here with these candles. So I think we're getting there close to the end of the rally. I mean, we could be continuing the bull run, you know, if this is just a big correction. One thing that I do see that the bulls have in favor is if we look at the high yield growth, the monthly chart, you know, when the RSI has been this low on the monthly, that's marked the bottom for pretty much every major correction other than the 2008 crash. So this could be something similar to 2008. We don't know yet, but it does have bullish divergence on the RSI, on the monthly chart, on the HYG. And so I think that's why we're getting this big counter trend that we are getting. But, you know, it could stall out and the RSI could turn back down and break below this 30 level and burn through the divergence. And in that case, we'd probably have a crash. But I don't know. We'll see. We also hit this trend line here as well. So that's marked, you know, pretty much the bottom of every major correction as well. But one thing that's going against the bulls on the HYG is that it did not participate in the rally this last week. It just went sideways. Same with the junk bonds. And you can see they were even down today as the market was up. So there's a divergence there that could be, you know, leading to a pullback. But I think that one of the main things is the Fed and then, you know, wanting to stall this rally out. So, and like I said, if that's the case, I think these memes will play catch up. And there'll be some big opportunities and some weekly call options. So I'll do a follow-up video on Monday, let you guys know which contracts I'm rolling with. Want to say thanks for watching, and we'll see you next time.